SVB, MoffettNathanson's Lisa Ellis, who joins us alongside our very own Kate Rooney, who got those comments from Brian Armstrong to help break down this name. Lisa, let me start with you. You got to justify to our audience how you get to that $200 price target. What kind of growth does that assume in the year ahead? It's certainly not coming from trading volumes, revenues, profitability like it has in the past amid this crypto winter and all the FTX fallout.
Yeah, that's true. So we do assume that the crypto market begins to recover in 2024, consistent with the prior cycles. Typical historical crypto cycles have been about 3 years. So if 2021 was the last peak year, then we put, a recovery in 2024, although one not anywhere close to what we've historically seen. And on that measure, which is on an outlook for 2024, that's a little bit above 2021. We're only a $200 price target is only about 8 times EBITDA in that year, which, just to put it in perspective, high growth names that I cover like a Block are over 30 times EBITDA. So meaning, we could be wrong by 4x and it would still be a valuation similar to that level. So it just gives you a sense that, like, if you believe in the crypto cycles and that crypto will recover and that Coinbase is fine, as their 8K today indicated, that if you've got, the strong stomach and can handle this level of like deep volatility and bottoming in the market, there will be tremendous upside when we come out on the back of this, which we're anticipating hopefully will be toward the end of this year. But that's a bit, uncertain, of course.
And it still begs the question, Kate, where that revenue, where that growth is going to come from, because that trading revenue, at least the fees, they're never coming back. You've got Binance in the market, slashing fees, more competition. Yeah. And if Coinbase is cutting now, who's developing these next products that's going to, develop the crypto economy that Coinbase talks about?
And that's been historically the bull case for Coinbase, that they'd be able to diversify away from trading revenue. They've conceded that, yes, eventually trading fees will be compressed, and they say that they're gearing up for that. Brian Armstrong and the rest of the executive team have really made the case since the IPO that this, like Lisa said, you need to have a strong stomach. It's going to be volatile. They've talked about other cycles and crypto winters, and said that you've really got to believe in their strategy long term. And he likened it in this scenario to the dot-com era, the boom and bust, and that internet companies that made it through that were more disciplined on cost, which is really what they're trying to do now. And obviously everybody wants to be Amazon in the end, but they're making that case to investors that we are tightening our belts. We're going to make it through this. And we're the best positioned in the market at this point, which is now sort of the new bull case, that they're going to be able to rein in spending, which they're showing with some of these cost cuts. And stock-based compensation was a huge expense for them.
Absolutely. And so, Lisa, if you're assuming then that Coinbase is going to kind of emerge from this crypto winter, it's going to survive and even thrive in the long term, the next cycle is going to look very different, though, isn't it? Yes, it's the most regulated, the most transparent play. But this industry, does that make it a profitable business, or is the next winner going to come from somewhere else? Is it going to be a private company that isn't going to have to build with all of those regulations or scrutiny in place?
Yeah, so I don't know that we believe necessarily that crypto trading, which has been the big kind of killer use case in this cycle, is going to be the killer use case in the next cycle. But Coinbase is, as Kate highlighted, rapidly diversifying their business away from the dependency on trading and really focusing on simply being an infrastructure provider for the ecosystem, regardless of what use case it is. So this could be NFTs, so, digital asset transfer and ownership, which there's a huge amount of enthusiasm behind in the industry. This could be using crypto for like the boring, but sort of
Lisa, quick question.
Yeah.
You say they are diversifying. Are they, or are they just trying to? Kate, to you, is there significant revenue coming from other places in the company?
So there's been subscription and services revenue that they've tried to move towards, also institutional trading. But one question going forward, they've talked about in this round of layoffs, also cutting in other places and saying some of the projects that were more ambitious, that aren't showing the more near-term promise, they're also scaling back on. So they're going to have to balance cutting costs, not necessarily investing in some of the growthier, maybe moonshot projects that they may have done a year ago, and trying to figure out what's going to work. One thing that Brian Armstrong did talk about was different types of self-custodial wallets, and really giving people the option to sort of adapt and say, hey, if you don't want Coinbase or any exchange to hold your money, you can still keep it with us, but in your own pocketbook, and then charge you from that. Okay. So things like that, they're sort of trying to adapt to that new environment. NFTs,
we'll
for
see.
a while, but
we know what happened to the NFT business.
Yeah,
anyways, ladies, thank you both.
Exactly.
Kate and Lisa. Lisa, we'll talk to you soon. Thank you.